Okay, sound check. Am I talking? Oh, cool, that worked. Can someone give me a yes if they can hear me? But I think I light up here now when I'm talking, which is good. I finally got this. Cool, thank you. Finally get this interface to do what I want it to do after 5 tries. Okay, well, there's a couple of people here. We're gonna go ahead and start. Are you guys seeing my main screen? I think I've got that marked properly now too. Yes or no? My dome screen? Can I get a yes if somebody can see it, or a no if you can? Yes, okay, thank you. All right, finally got this thing doing stuff right. Okay. Silly platform. Alrighty, this is just open Q&A. So um, I can either unmute you or you can type your questions. There's only 4 of us here, so there's a raise your hand thing somewhere. Go ahead and just say, in the chat, type if you have a question. If you want me to unmute you, I will. Say that too. If it's easier to ask it out loud. I'll do it either way. I just don't want to leave everyone unmuted because then it gets really noisy. So nobody has a question. Wow. Or we're just typing slowly. Well, while I'm waiting for questions, a couple of things. I love the conversation going on, Darren, between you and pretty much everybody, but the stuff you're talking about and some of the stuff Lee is talking about in response, there's some really good conversation going on there. I don't think it's distracting from the group at all. Some people aren't really capable of following it yet. Some are, and that's the idea behind a group like this. I hate the term mastermind group because again it sounds too much like Tony Robbins, but that aside, being among a group of people that are all working on the same problems is in fact a mastermind effect. The sum is greater than the individual parts by themselves. Okay, well, let's see. Nobody has any questions. You guys just came here to hear me babble, because I can tell you all kinds of stuff if you want. A couple more people are rolling in. Well, I guess we don't officially start till 10, so I'll just keep filling in till then. So let's see. A couple things. Is Summer here? Summer's not here. Okay, well, something he said is wrong, that the prop shops with guys, just with screens full of domes, that those are just interns. That's not true. There are a lot of people that literally run no charts at all. Other than when I'm teaching, I frequently turn my side monitors off and just focus on my domes. So Summer, if you listen to this recording, that was not an accurate statement. Most prop traders and most large scale traders of any kind do kind of what we've been talking about. Charts are for context, and unless they're swing traders, on a daily, weekly kind of time frame, they pretty much use some or all of the tools we're discussing. Some use TPOs instead of volume profile. Some are looking at 30-minute opening ranges, not 5. But the concepts are the same. And so, the conversation about auction within an auction and the micro auction and all that stuff that's been posted over there in Slack. And if you don't know what I'm talking about here, I'll put it up on my screen here. There's just really good stuff going on there. So it actually started I think in Docs Indicators, and then there's some of it is in group chat, and then we got it moved over, I think most of it to the emoji stuff channel. So here again, there's only 27 people in this channel. So if you're not in this channel and you're listening, my question is, why not? And this applies to other things. Like, let's see, I think we finally got, well, there's still one person that's not in my chart one. Process, yeah, these are the ones I did at the beginning, but here we intraday chat on ES. Great conversation. There's still 3 people have not joined that. Questions for me, I think I stuck everybody in there. Really good conversation going on in this open 5. And I think we finally got everyone in there. Cool. All right. Well, the webinar recordings, yeah, that one's catching up. All right. Well, people are joining the group finally. All right. It's good to see. So anyway, go check some of that stuff out, particularly in the Open5 and in the emoji stuff channels. And look at some of the things that some of their people are saying about what they're learning, because that frequently will help you understand where you need to be. You know, one of the things I haven't talked about at all in this session, and we just don't have time, but many people, because they've only been through, you know, university or high school or both, don't really have very good learning skills. In other words, they don't know how to learn. And once you get out in the real world, you have to get really good at learning stuff really fast. And it's a different type of learning than you have in book school kind of learning. So I really would encourage you guys to look how some other people are approaching this. Darren has a very deliberate approach to education, which in this type of forum and with my approach to teaching you, which is not to tell you everything, but to give you the stuff you really need and then let you go fill in the blanks on your own. What he's saying and the approach he's taking is a really good one. Same thing to Maria and basically anybody commenting in here about their experience so far, I think is learning a lot, because I can tell just by what they're saying. So if you're not contributing to that, you're missing out on my ability to give you feedback. Because, you know, for example, Summer, I pick on him all the time. Oh, he's here finally, cool. All right. So, you know, he's a really mechanical learner, and so is Darren, but Darren has a process applied to how he learns. And Summer's still hunting for Bubba's, and that's okay too. Those are both discovery processes. And Maria's putting it into the context of her background in options. And even Lee, who's, you know, been a prop trader and knows a lot of this stuff, little things I'm saying are triggering little, oh yeah, okay, it's with him. Just like stuff he says triggers that with me. So if you're not participating here, you're nuts and you're missing out on 90% of your education in this group. I'm talking about the Slack and all the channels. You know, we're getting there finally where people are joining all the channels. But for example, we have High Momo and HV Reversal tomorrow, and there's only 44 people in that one, and there's 42 in that one. So 10 of you are missing. I don't get that. So please spread the word if you're privately chatting with anybody to just join everything. Otherwise, they're going to miss out. All right. If you have a question, you'd like me to unmute you, please say I have a question voice in the text. If you just want to type a question there, if you don't want to talk, that's cool too. I'm leaving everyone muted unless you're going to ask a question. While you're doing that, Summer, you missed something I said. I mentioned it, that you should go back and hear it in the recording. I think it was before you got here. What you said about prop firm people with screens full of domes only being interns is just not accurate. There are many prop traders that don't use charts at all, and they're mostly momentum and scalpers, and you don't need charts for that. The really big, high volume, big dollar intraday players tend to kind of do what I've been teaching you guys. But blanket statements like that aren't constructive. And I'm referring to something you said in one of the forums here. And it's not a horrible thing, but just it's not accurate. So anyway, I think it might have been up here in Doc's charts, the thing I'm talking about. Anyway, whatever. I don't want to pick on you. It's not that important, but just that's not accurate. There are a great many people that just look at a screen like this and nothing else. Some of them don't use the meters or even tapes, because, you know, for a great many setups, the charts are really just distracting. And I know a lot of you aren't there yet, but the more you look at the fast charts and the LRCs and read Lee's comments about the auction within an auction, the micro auction, and the more you kind of take that and bundle it into a big giant ball of knowledge and then try to find the art in it, that's really where you're going to find Bubba's. And I know that sounds kind of obscure and esoteric to many of you, particularly if you're mechanical like Summer. But an example I would point out to you would be Darren. He's a pharmacist by trade, so obviously he's educated in sciences and math, and but he has a very deliberate approach to learning. And, you know, he looks at the form he's in, he looks at how the material is being presented, he looks at what other people are doing, and then he adapts to that. And guess what? That, my friends, is exactly what this means right here. Improvise, adapt, and overcome. That is exactly what that means. You have to do that all the time in trading, whether it's your coding or what indicators you're going to use to create the parameters for a setup, or what kind of patterns you're going to look for on the dome. Here's what happens. You'll nail something. You'll come out of this class and you'll have a setup like the open 5 and you'll be making money hand over foot. And then the market will shift a little bit. You know, it might become the open 7 or the open 10 or whatever, but something will change, but it will be just enough that you need to adapt. And if you don't take that kind of mentality that, you know, you're seeing Lee and Darren and even Sommer in his mechanical way, much more an engineering kind of approach, but still, you know, you have to take an active approach to learning. You can't just sit back and watch videos and expect to pick this up, you know, in the evening while you're not at work. It just takes a much greater commitment than that. Okay, I'm going to leave that there. It's really quiet. Nobody has asked a single question. So, you know, why are we here? I can babble, but I'm out of topics for the moment. Okay, here comes one. I'm going to go grab my water. I will be right back. I'm getting a dry mouth, and then I will answer that one, Darren. Okay, can I describe the process toward trusting your Bubba? Ooh, that's good. But before I do that, you just reminded me of some other conversation I wanted to point out. There was a comment you made in here somewhere. I think it was either in the open 5 or maybe in questions for Doc, and I'm not going to bother looking, but what you were referring to was, you said there was kind of 2 states to the market in your opinion, or your learning so far, kind of price discovery and then auction behavior. And that's sort of true. You know, Lee responded to it. That's, you know, again, we're getting into language, that semantics, but I would say it's more like it's always price discovery. It just is much less volatile when everyone agrees, which is why you get balance and you develop value and you get a profile that's symmetrical, because nobody's willing to stick their neck out. Now, price discovery is the same thing, but it means that you get the speculators coming in and you get the non-speculators going to the sidelines. And so it's the same idea, but people have looser parameters about what they're willing to do because those are higher risk players. So I hope that makes sense. It's because it's really always in price discovery. Just remember that if everyone agrees, then we have balance. And that's a really simple way to think about how markets work. Okay, now, can I describe the process of trusting my Bubba? Boy, you know what? I'm going to tell you guys like a long, short story about Bubbas, and then I think it'll answer your question. All right, so some of you have heard my story before, some of you haven't. Some of you have heard bits and pieces. The short, quick 30-second summary. I started trading when I was 13, birthday money, 1,500 bucks. This is 1973. And I was interested in options because of leverage, and I know a couple of you do that as well, or thought that way when you were getting started. Anyway, long story short, I caught some winners, a company called Comsat that was bought by MCI, and yes, by the time I got to college, when I was 16, I had a 6-figure account, and I lost most of that in one day on a flyer that I thought couldn't lose. And then I started, you know, kind of working on process. And at the time I was in school at UCLA, I was studying economics and problem solving, which is an engineering discipline and at that school. And so it was just really good timing. Anyway, so my first Bubba kind of experience was that understanding that the conventional wisdom is just totally nonsense. You know, everything I had heard and read about the stock market and everything the brokers said, and you know, keep in mind in this point in time, like putting on a 1 lot option position, which is, you know, 100 contracts, that was like $300 commission to do that. So you really had to either lose a lot of money or you had to really think out the positions you were in, and that was hard to do. We didn't have as much data. So what I realized right away was most of the conventional wisdom was nonsense, and that you really had to find your own systems. And that's when I started, buying trading books that were really old school, like Wyckoff and the Bible of Technical Analysis by, what's his name? Somebody help me out. Literally the Encyclopedia of Technical Analysis. Anyway, this is like a book. Yeah, John Murphy. Thank you, Lee. And, and I really dug into the technical stuff. So my second kind of Bubba experience, and remember the time frame here, we're talking about like right before 1980. I started realizing that by building charts in the computer room at UCLA on an IBM System 370, I'm not kidding, with punch cards, that I could find mathematical patterns, sometimes as simple as moving averages and whatnot. So that was my first kind of aha moment, that there were ways you could apply logic to markets as long as you kept in mind the behavioral finance aspect of that. And by that, I mean, the fear and the greed. And it was pretty much from that point forward that I adopted that improvise kind of approach. This is what I'm talking about, this improvise, adapt, overcome, which is kind of a military approach. But my point in doing that, and the way I'm answering your question, is that once I got to that stage, I kind of created new Bubbas whenever I needed them. So when I first started learning order flow, that's a really good example. I struggled with it a lot. And I told you guys this on one of the other conversations. One of the ways that I overcame that was I literally just blacked out the prices on the domes, and I turned my side monitors off, which there were 3 more of them at the time, and they had charts going horizontally, not vertically, and it was really distracting. My head was going all the time. My neck hurt at the end of the day. And I tried that. I thought, well, you know what? If I'm just going to look at order flow, I really don't need to know what the names of the prices are. And I worked this out with a mentor friend of mine, and it was a total aha moment for me. And all of a sudden, it was like, that moment in the Matrix where all of a sudden he can see the code going by, and you realize, oh my gosh, it's a Matrix, it's a game. It was like that for me. I mean, I swear to God, it was all of a sudden, these bulges made total sense to me. And then when I went back and looked at it on the chart, it was like, oh, okay, I see what the chart says. So it really helped me understand that you guys still see my screen share? Yes or no, anybody? Yes, okay. It got me really to understand that what I was seeing here and what I was seeing here, it just clicked. And so from that point forward, I was like, okay, now how do I trade? How do I get an edge out of this stuff? And that was really where I got stuck for about 2 years. And that would have been like 2014, 2015. And what was going on here, this is a better one to use for that example, bulge. So, and that's when I started really testing stuff. So, I've shown you guys this briefly before, but there's a lot of other layers to the process. And at one point I built a lot of models in Excel and just Google Sheets, and I just connected them up to my data feed, and I kept testing. So a lot of these strategies, you guys are like, wow, it's amazing, these work so well. Well, guess what? They work so well because I spent, literally years running thousands of trades with real money. I don't back test. I think that's a waste of time. And, sometimes it was just one lots. That's one of the reasons I like one lot so much, because you really learn a lot and then you can scale easily. By the way, something that I added, this has come up over and over. There's really 2 parts or 2 ways to trade the Open 5. There's the actual Open 5, which I'm now going to refer to as Open 5A. And then there's the rest of the day, which is kind of the B approach to trading that range. So that's something that, just talking to you guys, I kind of realized I was taking for granted, but in explaining it to you, it really is 2 layers of the same information. So exactly, Darren, that's a really good example of how my process is constantly getting revised. In fact, I should change this date because it's really now, and sometimes I forget to do that, but That's just my way of tracking my own changes, by the way, stuff like that. And it's one of the reasons I like Google and Drive and some of those things so much. It's a really easy way to integrate. Remember, I worked for Microsoft, so you know I'm an expert in all of the Office apps, and a lot of this stuff's just simpler. But anyway, so every one of these things was a result of testing hypotheses, and those came from I'd traded the first hour high and low forever. I had been using a 15-minute range, and it wasn't giving me the kind of information I wanted. So I switched to a 5, and it was just like, it went from being 60% winners to being 90% winners just on that one change. And I may switch it back to a 17 minutes at some point. You know, again, you know, you can't just finish this and then go make money. It just doesn't work like that. What you're doing is you're building a process for running your business. And mine is this: improvise, adapt, and overcome within this framework. And things periodically go away on here and I add to it. I try not to have more than 8 setups at a time because it's just, I don't need it. I could use one and really make a living, but depending on the times of the day. And this is really, really important what I'm saying right now. So if I'll slow down, some of you that aren't English native speakers, and I do talk fast, we're going to talk about instruments in the session later today. And a huge part of that is understanding the times of the day too. Because you know, people say, oh, you don't want to trade the indexes at night. Nonsense. Again, everything you hear is nonsense. You can trade the indexes at night and do really well. It's just a different set of tactics than it is during the day, because the volume's different, the volatility is different, it's more sensitive to news. So, so you know, I hear people say, oh, the DAX is too thin. Again, nonsense. You know, you can trade anything. I mean, it doesn't get much thinner than RTY. That's a really thin index. And I've traded it and made a lot of money trading RTY, and there's certain conditions under which I will even do that. One of the things about RTY, just while we're on that topic, is that it kind of is like a less risky expanded version of ES. If you run them side by side, the profiles on most days will look very similar. And so you can kind of play RTY with its much smaller tick increments on trending days instead of ES. So that's a really good reason, again, also in the instruments discussion, why if you're going to trade any of the instruments, even if you don't trade the others, that you have all 4 or 5 of them next to each other, depending on what market you're in and what times of day. Okay, so let's see. Question, let me roll back up. Summer, people like me need charts in the beginning and all other kinds of supporting tools to learn this stuff. I can't start with the DOM immediately, I think. I'm not saying they're not, Summer. What I'm saying is that you should use the chart as a tool, but build yourself a framework so that your brain's constantly back on the DOM. Don't say, I need to understand it on a chart first, and then I'm going to go to the DOM. Because if you play that back to how I described my learning process, I tried that, it didn't work very well. What worked for me was looking at the DOM from just its own point of view. And what am I seeing as trading's happening? And that was when I turned blacked out all the prices. And the minute I did that, it literally, I mean, in a matter of days, I was like, I can't believe I missed this. I mean, my first reaction was I felt really stupid, you know, and then I went on to like, Futures.io, and I saw these other people saying similar stuff about order flow. And again, remember, this is like 2014 timeframe, and I saw a lot of people talking about aha moments and light bulbs going off, and particularly people that had come from charts. So, you know, I will agree with you and disagree with you and tell you to try to keep a more open mind as your sensei. That's my position on your statement. Okay, more questions. David, I record videos of my trading days. Do you see an advantage when you play at a higher speed? Oh, that's such a great question. That is such a great question. I hear this over and over on all the Furu sites about, you know, you have to use replay and da-da-da-da-da. Again, you know, it's going to be the unconventional answer. I think there is huge value in recording your trades, your live trades, and going back with a coach or with yourself or both and critiquing your live trades. I think that is absolutely one of the best things you can do to get better. That said, I think that using replay to practice is a total waste of time. And the reason I think that is because you know what's coming. The reason markets are the way they are is because anything can happen anytime. And this isn't about how you react to different patterns on the dome so much as it how you react to patterns on the dome in the context, scream that out, of that moment and that day and that 5 minutes and those 10 ticks. So practicing that with trading that happened a week ago without that context, yeah, you know, you might be able to, it's, you know, learn some new reactions, and maybe that's good for hand-eye coordination. But beyond that, no, I would much rather see you doing drills in live markets, and preferably with small amounts of real money. That's my ideal way to learn how to do this. I mean, if somebody said to me, you know, I want you to mentor me, how should we go forward? I'm starting from scratch, or I know a lot and I want to learn what you do. I would say, okay, you know, do you have $5 grand to burn? Let's open a real account and put $5 grand in it. And you're going to trade one lots and you're going to do drills, and you might lose the whole $5 grand, but you'll be a world-class trader when you come out of it, and you might triple it. But here's the rules, you know, and you go through and you do drills and you only do one lots. And that's the way I would encourage someone to learn how to do this, not by spending a lot of time staring at charts and trying to understand, you know, the depth of auction theory, or, you know, what unfinished auctions mean, or icebergs, or any of that nonsense. I would just get in there and do it. You know, do you spend, if you're playing Call of Duty, do you read, you know, a book about Call of Duty, or you just get into the game? I mean, seriously. So I know there's people that are as emphatic about the other approach. In my experience, it's not as successful. But also, a lot of people aren't in the position where they can put $5,000 to work and take that kind of risk. And guess what? That's why you do combines and Top Step and places like that. So you can get to that point, but don't go in there. And there's a couple of you, and let's see who's here. 1 second, I'm just looking at the list of attendees right now. Okay, the person I'm thinking of, I don't think is here. Anyway, there's a couple of you that are just chomping at the bit to get back into combines. You've done them before, and now you think you know a setup. And again, I would strongly encourage you to take a step back and perfect your skills and work on drills. And particularly at this time of the year, you know, there's only 6 trading weeks left, and I don't know if you know this or not, Top Step closes their books at the end of the year. So, you know, if you're funded, you know what that means. If you're not, that could impact you. So just make sure you understand the playing field. You know, this is a business. Learn all of the, yeah, I think that's the right answer after the workshop. You know, there's a couple of people that want to start this week because they learned the Open 5. And, you know, I love the enthusiasm, but again, you know, combines are designed to be hard. Those risk profiles, you know, it's not so much the daily numbers if you keep your risk management good. It's the weekly ones that'll slaughter you when you're trying to scale in step 2 and when you're first funded. And that's where most people fail, because they don't consider that. They don't realize that, you know, a model that has an 80% win rate will have 2 failures in a row and wipe out a weekly loss limit for 50,000. And that's the problem. That's why I said what I said about the 150s. A couple of people emailed me about that. And they wanted me to elaborate on what I meant. I will do that more. But if you're really serious about getting funded, save up the money to have the fee for a couple of months, do 150,000 combine, and trade it like it's a 50. You know, trade 1 to 2, 3 lots. That way you'll fly through the scaling, and you know, then you'll be in a position to actually make some money. And if you know, it's got a $3,000 weekly drawdown, so if you're trading it like a 50, you know, it'll take you 4 weeks to lose that much money. So again, that's the kind of thinking I strongly suggest those of you who are thinking about. Oh, he's here. Good. Okay. I just finished talking about combines. Oh, well. And why I think 150s are best and should be traded like 50s. Anyway, we'll talk more about that. I don't want to repeat myself. All right. Other questions? Let's see. Your faith in Bubba is tied to a process that is reliable, not necessarily the setups. Actually, Darren, that's exactly right. It is not the setups. What my faith in my trading skills is my process. The setups are a component. Remember, put this back up again. that's why you shouldn't, those of you that are, thinking, oh my God, I've got one good setup down the Open 5, I'm starting a combine this week. And that's why I said I'd wait till next year if I were you. Save up the money, do a 150, and understand that this entire thing is what you have to have down, because these will change. The Open 5 might go away and become the Open 15, or some new setup will occur, or we'll go into crash mode. And then it will be versions of high momos and ledges every day, and overnight flips every day. And it's a completely different approach than the way I trade those same setups now. So yeah, that's a really good way to put it, Darren. You need to constantly be looping through this. That's why I always start over here every day. Make sure that I'm not getting a big head, and make sure I'm competent to trade and I'm doing all the right things for my body and all that. And then I really walk myself through this. What's going on here? And is there a need to do this? Most days I skip that. But, one of the things I do if I'm losing money and it's on a setup that normally works, I immediately look at why it's not working and try to figure out if it's something to do with me, or if I need to go back and re-examine that setup. So the range one, by the way, right now is one of them that I've kind of opened back up and started fiddling with some more. So when we get to that, I'll explain. That's a few weeks away yet. Okay, let me look for questions. Would you say that the Momo setup is the easiest to learn C on the Dome? No, and the reason I would say that, Sommer, is because, and no, the Open 5 is not more of a chart setup. It's just more visible on the chart if you don't know how to read the Dome, because you're seeing it after the fact. You're looking at the Open 5, and let me get my mouse over here. So what I mean by that is you're looking at the Open 5 and you're saying, okay, if it touches here or here or here. And what I'm saying is if you're in the Dome and you really understand what you're seeing, then you would have been getting long in these first couple of candles, because you would have felt that imbalance and all this buying. So it is not a chart setup. It is very much a Dome setup. I sometimes enter it in the first 15 seconds from the Open, if the energy justifies it. So to answer your question, a hard one is Momo. And the reason is traders chase it. Momo is FOMO, okay? You can quote me on that. People that try to trade HMOMO that are not skilled traders tend to chase it. So they get in too late and then they hold too long. That's why Momo is harder to do. It requires a real keen sense of the time frame you're trading. And a lot of traders confuse their time frames while they're in them. They go into a trade that's a scalp, and all of a sudden it becomes a 15-minute, add to a loser swing trade. And don't tell me you all haven't done that, because I know you do. And that's the problem with that kind of thinking. Are there setups that are easier to learn solely with the Dome? Oh, that's a good question. Yeah, the easiest ones to learn with the Dome are the edges. Edges and ledges, which is one type of another. Ledge is a form of edge. So for example, if we were trading ES and we were, right here, right in the middle on value and blah, 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 and on no momentum whatsoever, and let's assume, this upper area, let's say that's the high there. Okay, so this was the range. And so let's say we're up here and it's not 2,700 contracts, but it's, 20 contracts. It's just nobody's really playing either way. That becomes a real good, low risk, high reward play either way. You can play it as a potential breakout, or you can play it as a pullback to the middle, depending on your tactics and your time frame. But you wouldn't even see that on a chart. You'd have to wait until you had a couple of tick bars that were kind of dead, and so I don't agree with that. And I think that edges and ledges are probably the easiest thing to see, particularly ledges, because a ledge setup will typically look like this. It will have ES at the high of the day, and it will have YM at the high of the day, and it will have RTY at the high of the day, and it will have NASDAQ at the high of the day, and then you'll see RTY leading up to new highs, or NQ, or both. In a correlated market, I'm saying this is not under all days. This is the days when we have more or less correlation, which is probably more than half of them. And so when you see that, that makes the ledge breakout. I stopped testing it at 99%. That's how likely it is to go. You just have to get your entry and the time frame right. So no, I wouldn't say that H momentum is, and I'd say that ledges and edges of my setups are probably the easiest to see on the dome, just because you're at the edge of the prices and you don't have to do a lot of interpretation. Okay, did I answer your question, Summer? I think that was long-winded, but I think it was helpful, hopefully. How would I define a scalp in terms of time? Ooh, that's a good question. Depending on the setup, I would, well, all right. My language and what's more conventional language. When I'm talking about the scalps I use on here and weight and scale or weight and scalp scale, this language here, I'd answer your question with that scalps are trades that are really fast, less than a minute to 5 minutes max. And then everything else falls into what I call a weight setup. Now, having said that, I also say regularly that every trade I do is a scalp until it proves otherwise. So even if I'm in a high volume reversal or in a spring or an up thrust, and those tend to happen pretty quickly, the ones that go slower are the flips and high volume reversals. They tend to kind of meander before they just suddenly go the way you want them to. And so I go in those with the idea that it's a scalp from the point of view of what losses I would be willing to take. But in terms of time, I might sit in there nibbling, with a one lot for half the day, as long as, the parameter of the trade doesn't change. So I don't look at it so much in terms of time as I look at it in terms of how much room I'm willing to give the trade. And time is certainly a component of that. So I hope I answered your question. Is it Haresh? Oh, let's see. I'll try to pronounce your name. I know Desai because I have a good friend, Hemant Desai. Is it Haresh? Is that pronounced like an E, Haresh? Is that proper? Correct me if I'm, yes, okay, Haresh, thank you. Did I answer your question? Yes, okay, cool. All right, Harish, okay, I knew it was like an E, so it's more of an emphasis. Okay, Harish, thank you. I will remember that. Yeah, my friend Hemant, it's really funny because it's like, Hemant, and you have to like exhale while you say it to get it right. And he told me that once. He said, okay, don't say Hemant, say Hemant. And then I started doing it right. Anyway, all right, moving on. Does a true break of a high Momo look any different than a late trend climax on the dome? You're interpreting what I mean about high Momo, Darren. High Momo is really specific. And the typical day to see it is on a trend breakout. That's where you usually see it. But when we talk about the setup, we'll talk about it more. But it's one of the most interpretive ones, which is why I'm combining it with high volume reversal when we do it tomorrow. Because often one leads to the other, like we'll have a high momentum news break one way or the other. And it has nothing to do with the trend in that instance. That's a good example of where that's just completely wrong, Darren. All right, here's a perfect example. It's overnight hours or it's pre-market and some news hits or a tweet hits or whatever. And we just have a massive high momentum move one way or the other. And there are conditions under which I will join those. And then there's conditions under which I will wait till I see what they're going to do and then I'll attempt to fade them. And those the first example, if I was going to join it, would be a high Momo trade. And if I'm waiting to fade it, it's probably going to be a high reversal setup. So those often go together and they have nothing to do with a trend. They have more to do with a shock to the system. Guess what? Price discovery, once again. The auction's always going, but if everyone suddenly gets spooked out of their trades, then the auction spreads out. The speculators move in and nobody's willing to take significant positions unless they get to the extremes. And that's exactly what happens when there's a shock, which is why markets crash, and it's why you have these crazy dead cat bounces when we do crash. Okay, next question. What is the setup I usually trade, the one lot scalps? All of them. I don't really understand the question. Gurdhar? Can you elaborate? So like when I post all those results and whatnot, that's everything, because I'm not necessarily doing one at a time. Remember, a lot of times my setups overlap. So You know, an open 5 will also be an edge or a ledge breakout. In fact, a ledge breakout and an open 5, that combination is really common. And then it becomes an HMOMO. And sometimes it becomes a high volume reversal or a flip right after that. And, you know, that could all occur in the first half an hour. So, again, I don't want to sound like a broken record, but you guys that are chomping at the bit to run with one setup, that's not a bad way to be thinking. It's learning one setup is a great way to go out and make money. But too many of you, you know, with the exception of some of the more experienced guys here who are polishing their playbook or filling in the blanks or the pieces to the jigsaw puzzle. I've seen a few comments like that. Steve Weber's one that comes to mind. But other than those people that are kind of in that mode, the rest of you, you know, look, not much is going to happen between now and the end of the year. It's a relatively short number of weeks. You know, I may never do this again. I may drop dead on the 31st of December. You know, if I were you, I would immerse yourself in this workshop and the material here and the other traders here and what you can learn from them. And I would not be chomping at the bit to nail one setup and run out and make money with it. I would really be trying to get the collective knowledge. You know, my style of trading is all pretty similar. I have a certain style, and, you know, it's different from other people's style. And so, you know, one of the good things about watching this is you can see how I adapted my style to a variety of market setups, but I approach the market generally the same way every time, you know, like everything's a scalp until it proves otherwise. And again, if you really model your experience here after a learning experience and not how fast can I get back to a combine and get funded, I think you'll have a much better long-term experience. I really do. Why don't I like to scalp on treasuries? Because they move too slow, way too slow. That doesn't mean, Ferv, that it's not perfect for you. You know, just listen to me when I talk. You know, I can do 15 things at once and I'm bored. So, you know, stick me in treasuries and, you know, you'd have to scrape me off the ceiling. I would be so bored. That's one of the reasons I trade the markets that I trade as well, because it gives me a balance of setups. You know, last week I wasn't posting much about my live stuff, but I was trading gold. Gold got crushed, and so there were some really good swing trades over in gold, and there were some fun scalps in the indexes, and, you know, it was kind of like two different mentalities. That's one thing I like about this setup too with Jigsaw is I can have, you know, be trading one account over here in gold and a different account over here in the NASDAQ, and I can see it all at once. And that's one of the ways I manage risk. I think I've mentioned that before. And then I have this kind of lottery ticket account when I just want to throw one lot on at the absolute high of the day short, you know, and just leave it and see what happens, you know, and I have an account for that. So anyway, how much? So did I answer your question, Ferv? I mean, it's just too slow for me. That doesn't mean you shouldn't do it. You know, Grady likes to, although right now he's been saying that it's no good either. So I don't, you know, I don't even watch them very much. It just isn't my thing. Okay, Maria, how much room do I give a fade trade to work out before bailing? It depends on the setup. If I was fading an edge or a ledge, well, let me rephrase that. If I was fading an edge, I give them a little more room because they're within the range. So, you know, let's say this was going on, you know, that's the VA, and I was kind of fading this area up here with the understanding or the idea or the theory that, yeah, we might go through the thin area, but this is pretty much going to hold us. And, you know, that was more or less true. So the further up it went, the more interested I would have been. So the way that I do that is instead of trying to get a perfect entry, and Maria, listen, this is really a good thing for, and this is true for all of you guys, listen carefully. For those of you trying to learn how to kind of go from one lots to scaling, you know, my initial reaction is to try to get these right with one lots. And if I did, let's say, you know, I was trying to fade this end of the range. So I was selling 86 and it started to get away from me, you know, because it's so thin here, I would expect it to get to 88. I'd get out of that one immediately. Or if my thesis of the moment, remember, I'm not thinking one lots now, I'm thinking my account, was, you know, this is just this whole area from 89 down, you know, even down into 83 is probably at risk, which it turned out again it was. If that's what was going on, then I probably would have been, you know, playing it more like a range, and I would have incorporated that edge into it. Now, I would not do that, on the other hand, at a ledge up here. I would give that very little room, because once those go and people start stopping out, that's, you know, what Pete talks about. Pete Davies talks about the pop, you know, and you get this, just particularly in the NASDAQ, boy, you know, when it breaks out of a ledge, it'll just go whee, and then turn around, come right back down some of the way. And that's your clue whether you want to enter that one again, you know, and go with it, is how far down it comes and what happens. But trading that pop is one of my favorite things to do. When I see that coming, I'll get long before the edge, you know, the high of the day. Like in this kind of a scale here, I would be trying it down here with the idea that people are going to start stopping out before the top of the day or the high of the day. And then we're going to get the pop. And then I would either mark it out or have a target already in place, you know, a nice trade away, maybe 15 or 20 ticks. So that's one way to play that. So the answer to your question again, and that's why I really want you guys, sorry, my headset's banging around. It's my cord for some reason won't stay where I put it. There we go. Anyway, so I hope that answers your question. And it's part of what I was saying a minute ago, that you guys need to, you know, slow down a little bit, and you know, you're doing great and you're learning stuff, and I love the conversation and I love people's feedback about how they're applying it. But again, look at this entire workshop as a learning experience, and don't be in such a hurry to necessarily go out and apply it. I think it will apply more, and you'll be more successful doing that if you get the gestalt of it, if you get the collective experience of all of the different pieces. That doesn't mean you're going to be a good ledge breakout trader, but it might make you a better edge or open 5 scalper if you understand those other pieces. I hope that made sense. I'm reading questions. So let's see. How long should you prove your Bubba before transitioning to full time? Ooh, Darren, that's a great question. I personally believe you should never try to rely on trading full time. I believe, and I've done this I've done this my entire trading career. Now, let me clarify that. For example, when Uber used to be profitable here in California and fun, I live right near a big university. I used to drive Uber, and I did that from 2013 till a couple of years ago when it became a nightmare. And you could go out on the weekend and make $500 or $1,000 and talk to people and do something with a completely different part of your brain than trading. So that's an example. Other things people do. When I was younger and when I was in college, after I got out of college, when I was between 2 startups, I went and got a job stocking shelves in the grocery store, because it's very physical. You know, you're lifting boxes. It's at night, so it got me kind of trained in my polyphasic sleep. And so I didn't do any of those things necessarily to make a living, but I at least had, you know, 500 or 1,000 bucks a week or every 2 weeks, so that if I didn't have a good trading week, I didn't freak out. So now your situation is a little different because you have a profession. Now, what I would suggest, I asked her, and at the moment she's not interested in letting me share with you, but maybe that'll change. I have a friend who's a pharmacist by training like you, and she was one of the people I taught to trade when I lived in Colorado most recently. She's in Denver, and she does pharmaceutical industry consulting virtually, and is a trader. And so every now and then she'll go and speak at a conference, and she's got some niche. I don't know exactly what it is, but basically she found a consulting gig that she works a couple of weeks a year and makes 6 figures doing that. And then she trades the rest of the time, and that's her balance. So I guess what I'm saying, Darren, is that I don't think it's a good idea to ever say, I'm going to sit at my desk 12 hours a day and trade. I'm saying that if you're relatively new to it, something physical or completely different, Uber, whatever, you know, I have a friend that works as a day camp counselor as their balance thing, and, you know, doesn't need a lot of money, but it pays. And again, it gets her out and moving. I have a friend that's a coach and a trader. I mean, coaches a basketball team, and he's running around the court all the time. So, but, you know, one of the things I would avoid doing, if you can, is, oh gosh, that's a great question. I'm going to come back to that in a second. There's always gig economy kind of things. Uber sucks now, and depending where you are, there may be things. If you're a coder, doing some coding on the side is good. I have a background as a sales trainer, as a technical trainer. So one of the things I did in my 30s to supplement my trading was I worked as an independent trainer, and people would hire me to go train this on XYZ subject. And so for 2 weeks I'd go off and do that, and I wouldn't trade, or I'd swing trade from wherever I was, and then I'd come back and I'd go back to my desk stuff. So I think that is a real component of finding your Bubba as well, because every personality is different, and you got to find what works for you. And I'm not married and I don't have kids, and I have a dog business too. You guys have seen me post pictures of all different dogs. Maybe you figured that out. A lot of those are friends, but they became friends because I house sit and walk dogs for a living. That's not for a living. I get $20 an hour to do it, but it gets me away from my trading desk and down on the beach with somebody's Dalmatian or whatever. So figure that out so you can make trading as a life work for you is really the answer to your question. So the sub question within your question is, at what point do I think I'll be able to make a living? Well, if you want to make a 6-figure living in trading, I would probably, from the point you're at right now, I would assume 18 months maybe of every day. And then maybe that would be a good transition. It's really hard to sit at home and trade when you have to make money. That's really hard, guys, because you're going to make stupid calls. You're going to trade emotionally. But that's one of the reasons to do Top Step, for example. And, I've heard all the conversations, $150,000 isn't really $150,000, it's $7,500. Whatever, again, more nonsense. The point is, it's not your money. So you either make money, which you get a share of, or you don't lose money. So as far as I'm concerned, that's a no-brainer. Unless you're independently wealthy or have a trust fund or have been doing this for a long time and have a lot of resources, I strongly suggest you get funded somewhere, Top Step or any of the other guys. A lot of them are shysters, so be careful. Make sure you check them all out. I know Top Step are legit because I know the guys, but that doesn't mean some of the others aren't, although some of them are definitely not legit. So let's see. I'm looking more questions. Okay, Maria, yes, thank you. Okay, on to that. Thank you, Lee. I know you agree. And for a while, guys, between 1999, I think I told you this before, and 2003, I made my living by teaching college and by doing some consulting work and that training that I mentioned, consulting training. And I had another group where I taught trading futures. I was one of the first people to ever do that in a Microsoft network group, which was before it was before Google. It was part of the old IRC chat world, with a cover over it. And, if you're old enough to understand what I'm saying. And that was really cool. It was a fun business. And, for when I was 40 and even more energetic, I loved it. I don't really have an interest in doing that now. I'd love to find a way to be part of an educational group and, be able to do it on the side, make a little money doing it, and have a different thing to do like I'm doing now. So that's always one I've considered. For some of you, I know Lee's, going that way. He's got a business and a website. And, a lot of people find cool Bubbas and cool other career cash flows within trading, whether it's people that do seminars on psychology or, whatever it is. Just don't become a furu, whatever you do. Don't open a Discord channel and, broadcast on that gaming thing, whatever, Twitch, whatever it is. That's just nonsense. None of those guys actually do that for a living. Not one. I've literally never been aware of any one of those guys that was a legitimate trader. So, just get out there and spread the word that entire world is nothing but BS, because it really is. I know a few legitimate people on Twitter. I'm not saying that. I'm just saying that those guys with those rooms, most of them have never actually traded for a living and aren't capable of doing it. find at least one source of guaranteed money. Yeah, even if it's something really simple, or if you're married, maybe work it out with your spouse that, they're going to get some sort of gig. And so, and they really need to understand how hard this is for you. If you're married, or have a partnership, live-in spouse, partner, whatever it is, and you're going to be trading for a living, make sure they understand, the landscape and how hard this is and how different it is from anything they could possibly understand. I mean, the only way they can be supportive is by just leaving you to do your own thing. They will never understand it. It will always seem like gambling. And, just forget it. You're not going to win that conversation. Don't even have it. Just, the way you win that conversation is by, producing paychecks. And, it's like my friend. I have a friend who's a World Series poker player. I won't name him, but you would know who he is. And he told me the first time he won a World Series pot, and he went home, and that was the last time his wife ever said anything about gambling. And he's been to 10 final tables. So, and I said, so what's the moral of the story? He says, bullshit walks and money talks. So that's the only way you're going to get your spouse to understand. My mother and father, my father's passed away. My mother has Alzheimer's, but I've been doing this for 20 years, and they never got it. So, 20 years that they observed. That my dad's been dead for 15. So anyway, you get the point. Okay, more questions. I'm not seeing enough questions. This is called office hours. This isn't just me babbling. I do that just fine. You're welcome, Darren. How easy or difficult is it to have a startup and also trade? Great question. Depends on your role in the startup. I know what you're talking about for yourself. If you're going to be the principal, which I know you plan to be, impossible. If you're going to be one of several principals, I did that in 2000 a couple times. Excuse me. Fast forward a few decades. I did that in the 80s a few times with startups and trading. And if you're interested, go check out, where is LinkedIn? This company here, come on. Okay, yeah, I was doing, let's see, this thing right here. So that's me right there. This is a software startup in 1982, computer greeting cards. And I traded while I did that, but they were swing trades. So, over a period of days and whatnot. I did options trades from the airport on my little quote trick thing. And those were day trades, but that was very specific option spread trading. So to answer your question, it's really hard. But if you're part of a team and your roles are real well defined and, people actually go home at night and don't live in sleeping bags on the floor, like most startups, then it's doable. Particularly if you just trade, like the open. I know a lot of friends that do that, particularly out here on the West Coast, because it's so early. You can trade the open, still get to the office by 7:30, and beat everyone in. There are a lot of startups here in Santa Barbara. I mentor a few of them, and I'm involved a little bit with the VC community here. And I know a guy that does that. I know a couple that do that. They trade the open and then go work their companies. And that's one of the reasons they located here, was to take advantage of the time change only in reverse, That works for their families. They're up and trading before their families get up. They get home for dinner, and they just have to go to bed early. That's the thing. So I'd be careful of that. You're welcome. And you and I'll talk more. Okay, I trade the open on the West Coast at work by 10. There you go. Okay. So that works for a lot of people. And, again, adapt that to wherever you are. I have a friend that trades in Australia, and that's perfect. It's nighttime. So, and then he goes surfing. So I have another friend who has doesn't have anymore. He used to have a business that rented like water sports equipment on the beaches in Belize. Okay. And when he wasn't doing that, he was trading. And one of the concerns with that is in a lot of those resort areas, you can't get good connections. And that's always been something I wanted to do in the Caribbean or in the Virgin Islands. And to this day, particularly after the last couple of hurricanes, you just can't get reliable high speed down there. So not doable. Okay, God, there's a bunch of folks here just listening. Come on, you guys, you must have questions. Ask them. If you want to just speak, I will unmute you. That is a capability we have in this setup. You don't have to type. How would you define success for my students? How would you define it, Maria? I would say, given the cost of this workshop, if you walk out the door in 10 weeks having learned anything, I'd say that it was successful. Given what I'd like to see, you know, I'm seeing it. I think I'm seeing it. Given that we've only been going 2 weeks, I really like some of the discourse, and I really like some of the stuff I'm hearing. I do. There's a question from Samar further up on the dome. The dome is, you talking about the black box one? How can you get inside the black box? Okay, I'm going to answer this 2 ways. Number one is, because you're viewing it as a black box, you're missing the art. That's the first way I'm going to answer it. By that, what I mean, the art is the human aspect of it. It is not as mechanical as you want to think it is. And that's just the way your head works. I get that. But if you think about what's actually going on, you know, we're not trading live here, but you know, if we were going back and forth and, you know, and the bids and the asks were going by and, you know, you could see the action, you know, it really is just a lot of humans being emotional about making money. So I really think you find an understanding of the dome in that statement. And you find the art in that same statement. Now, if you want to learn it mechanically, how to interpret it, my suggestion would be get everything possible out of this workshop that you can, and then go pursue some of the more technical platforms. And I'm speaking of one only, and that would be TT with ADL. And the reason is because it's the only platform I am aware of that has coding capability down to that level. NinjaTrader, if you're a really sophisticated coder, there's ways to do it, but it doesn't work easily. It cannot be done in Sierra Chart. It cannot be done in TradeStation. And as far as I know, the only place to do true analysis of what's flowing on the dome is to use TT's platform, Trading Technologies, and use ADL. Yeah, ADL is a language that literally lets you build algorithms based on behavior kind of things you're talking about, Samar. So you could go in and you could micro-analyze under what conditions a ledge is actually going to break out and what would confirm it. And you could literally build an algorithm that did that. Now, that wouldn't be you know, a trading system that you could just turn on like the clowns on Top Step talk about all the time and just let it run and make money, because that's fiction. But it would be a way, when you get that set up, you would just press a button and that algorithm would execute for you. That's how a pro would use that. So I would, so that would be an example for someone like you, Samar, you know, pursuing the more technical approaches. And that's where I was, you know, 20 years ago. So I get it. But I think, you know, after you do that, what you're going to end up doing is kind of tacking back in the direction of thinking more discretion. Because most of the really big traders that I know, and this is going to be, when I say most, it's north of 80%. And big traders, you know, guys making 6-figure livings with big accounts or trading other people's money. And 80% of them, maybe even more, are discretionary. They are not systems traders. That doesn't mean they don't use systems and setups and algorithms. I do, they do, we all do. But it means that the decision-making process, they rely on their own judgment. They rely on a learned skill. They're like a surgeon doing heart surgery and something is a little off. And, you know, they don't pull out the textbook and say, okay, well, let's see, that's not 1 millimeter, so it's not that. No, they just fix the heart. They do whatever has to be done to make it work. They adapt, they improvise, and they overcome. That is a mentality called work the problem. That's what I call that, work the problem. Don't go looking for solutions, work the problem, and the solutions will come to you. Okay. I hope that made sense, Samar. I mean, I respect your desire to do that with it. The direction I would go is to TT. There's a lot of intuition, Samar, when it comes to trading altogether. You know, if it was possible to be a successful trader without intuition, then guys would write trading systems that would work when those conditions were appropriate And those things would make money, and you could just sell a trading system, and somebody would buy it, and they would just turn on the trading system, and it would make money. Nothing I just said in the last paragraph is reality. It just doesn't work that way. There are no trading systems you buy that you just plug in that make money. There are strategies that work under certain situations. But it's always a question of understanding, as a human with discretion based on your skill and your personality, what that really means to you. Yeah, what Lee is saying here, everybody read that. It's totally right. And you know, I spend a lot of time doing this, actually recording my results. And you know, when I say I test a setup thousands of times with real money, trust me, I do. And I fail at it a lot. I allocate a lot of money to testing and failing. It's one of the reasons I use TopStep. I've told you guys that many times. It's a real orderly way of being accountable to a specific test. And so, you know, you don't want to discard the you know, record keeping and testing and journaling, but you want to learn to use it not as a tool to perfect a system, but you want to use it as a tool to perfect your skill. Your skill is what you're developing. You're not developing code. Code supplements your skill, but discretion is still the art. And again, you know, if you're just joining us, I do not know, I don't even think it's 20% of the traders that I know that are real full-time, trade for a living, big account, 6 or 7 figure or more people. I'm struggling to think of 15 or 20% of them that are not full discretionary traders, using all kinds of tools and algorithms and whatnot, but they make the decisions. Sometimes they have a room full of interns and they give different interns different assignments to make decisions, but they're still following a process that they developed and using their skill set and their interpretation of the auction data. You know, everybody interprets the auction generated information a little differently. You know, that's why I refer to scalping. You know, I tend to look at the fastest time frames because I find they're the most, in other words, they're the most accurate. I don't make trading mistakes when I'm watching a 10 tick chart or a 50 tick chart in ES. I do make them if I make an entry based on a 5-minute chart. Now, that doesn't mean I can't look at the 5-minute chart and fine tune it with the tick chart, which is why I ended up learning how to do that. Because I realized that one gave me context and the other gave me execution points. And how did I realize that? By failing at just using context and not using execution points. In other words, not using the DOM. So, you know, I wish all of you had the luxury I had when I was learning order flow to be able to go out there and try it with real money and lose now and then on a grand scale. You know, I told you guys, even as recently as a few weeks ago, I had a $3,000 down day. It's unusual for me, but I was testing something and I was willing to give it some room. And then the next day I more than made it back because I made the adjustment I needed. And that was the shove my psyche needed to understand that the road I was going down just wasn't right. And it wasn't going to work no matter how hard I tried or how many contracts I added to it, it just wasn't going to work. So I needed to go back to rethink the whole theory. And I did, and I tweaked it, and the next day it made a lot more than I lost the day before. So, you know, find a safe place to do that. Let's see. Yeah, that's another way to do it. And that's why I recommend, if what Lee just said, his full-time CL trader. That's why I strongly recommend, you know, if you're really into the nuts and bolts, you know, something like Jigsaw, and I'll say really ADL on TT is really the only platform you can get to that level on. Day Trader, which is the, you know, the standalone version of Jigsaw's platform, can do a lot of the stuff you can do, but it doesn't have the tools to build algorithms like TT's does. And you know, even if you don't want to build your own algorithms, at some point it's worth doing the trial of that platform just to understand what the tools are that are out there that someday you could use. So, you know, I totally agree with what Lee's saying here, that, you know, you really need to understand, you know, this is a business and there's lots of different tools out in the business and there's lots of different approaches to the business. And so really your challenge is this. I posted this over in the surfing group, And I hope all of you saw it, but if you didn't, you should have. I don't duplicate everything. This was a tweet from a guy who coaches traders. And God, why is Facebook so friggin' slow today? Oh, I bet they're doing their pictures. This one. So this is a tweet from Lance Beggs. And there are 6 weeks of trading left this year. What if you focused each week on one of these areas of your business? Notice how he's not saying setups or business. Improving process and routine. Again, not setups, not indicators, not buying a new computer. Improving process and routine and setting yourself up for a good 2020. And look what he talks about. Consistency in prep, consistency in routine, trade selection, processes for execution, processes for trade management, routines for recording. That's how you get consistent. Well, this is what I've been saying this whole session. And there's just nothing more true. So critical, and that's how I would use this workshop. So anyway. All right, let's go. More questions. Gosh, it's 10:30 already? Okay. I'm trying to get in to get a haircut, so hold on a second, guys. Let's see if I can get on this ladies waiting list. If I can't, then we can continue this. She's still not there, damn it. Supercuts, $15. But my lady didn't come in today. There's one lady I really like there, so she gives good haircut. Okay. Yeah, you know what? These guys that get $50 or $100 or $500 haircuts on airplanes or whatever, they're fucking nuts. Supercuts, $15, perfect. Okay. It means when you're trading the DOM, you're using implicit knowledge that's difficult to describe in words. Implicit knowledge is not the words I would use because that implies that it's there. What I would use is that you're practicing a learned skill, like any other skill. It's like, if I'm capable of building fine cabinets, beautiful walnut furniture, I didn't just pick that up watching a YouTube video, and I could watch one and try to duplicate it, and I could duplicate some of it, but I wouldn't have the skill that a guy who's been doing it for 40 years has. Why does the guy who has been doing it for 40 years have that skill? Because he's done it so many times over and over. And that's where he learned the skill, by repetition. That's why drills are so important. Get a good DOM up and start doing one-tick drills, and you'll learn order flow really fast. Trust me, you really will. I mean, that's really the essence of it, Sommer. It's not really implicit. It's learned experience. It's learned skill. Implicit implies you have it or you don't. And, I don't think that's true. Okay, other questions? No, that's not what I'm saying. If you want to learn swimming, jump into the water. I'm saying if you want to become a NADI certified scuba diver, step 1, learn how to swim. Step 2, book study about scuba diving, about nitrogen narcosis, about what happens when you get the bends, about depths, about pressures. Then go take a scuba diving class in the ocean or a pool. That's how I would do that. If I wanted to learn how to trade, I would get in there and learn how to trade. You have plenty of book knowledge. You have all of the understanding of depth and pressure in the bends. What you don't have is enough time just struggling in the water and understanding what's actually going on and converting that to actionable experience. That's what you need to focus on. Okay, how about some other questions? There's a lot of folks here and everyone's pretty quiet. There's 17 people here. I'm answering questions from the same 5 people every time. Come on, guys. Don't be shy. Some of you must be just totally lost or have some question. Yeah, you don't even want the fishing rod, Michael. You want the box of tackle that you can build fishing rods and lures and design flies from. That's what you want. That's how you really learn the art. It's like fly fishing is a really good example. No questions. Okay, well, tell you what, I'm going to put myself on pause for just a second here. I'm going to go get some more water. If you guys want to ask any other questions, both verbally or in text, please do so. And don't ask verbally until I get back because I won't hear it, but please type that you have one. I'm going to do 1 or 2 other things, and then I'm going to get out of here, I think, and we'll talk a little bit more about the instrument session. we'll talk more about some of this when we do the instrument session. Just kind of a preview, because a lot of you will be at both. You know, understand that instruments have personalities, just like your trader personality. And that's something to think about as, you know, we do this and do that session and as we do any of this. So anyway, I'll be back in a second. Please type questions. I'll be right back. All right. He's back. Technical question. I think you mentioned that you can't share your template for, yeah. Okay, I spoke to Dave at length. Dave is tech support over there at Jigsaw. There's no way to share a template from either of the plugins, even from Ninja 8, although there's a way to hack it in Ninja 8. But once it's in DayTrader, it's shareable. So I will do two things. That's a good question. People ask me this a lot. I'll tell you what, Darren. Yeah, no, rather than consult me, here's what I'd like you to do. Remind me, and what I will do is I will go through, and it's ridiculously friggin' tedious, but I don't mind doing it once. If I go to Appearance and literally show you guys every tab, well, I'll tell you what, are you good at screenshots? We can do it right now. They're all the same. They're just different colors for oil. Hell, all right, we'll do it real quick. I'm just going to show you the tabs. I'm not going to explain anything, but it's the same in all the plugins for Jigsaw. So this is the miscellaneous tab. If you see a number like this next to a color, you could just kind of note that it's a form of gray. It took me a while to get all the colors the way I wanted them. So you don't have to use that exact color. Just, you know, that's because I grayed it out. I don't use alerts, so these don't really matter. But because I don't use pulled orders or any of this stuff. But you can see the rest of the settings. These things are turned off. Histogram orientation, ask, bid this stuff. Just take screenshots. I don't want to go through them all. And then, boy, you know what? Who would like to do me a huge favor? I'm going to go through each of these. Take a screenshot of each, post them in Jeff's chart setups. Darren, would you be kind enough to do that since I'm doing this for you? Okay, thank you. I hope you will. Thank you. All right, so post them there, each panel, and then if there's questions, I can answer them on each individual one. So that's the alert. That's price. Total at bid. Let me know if I'm going too fast. Total at bid histogram has to be turned on. Bid snapshot. Bid depth. Current at bid. That has to be on. Current at ask. Ask depth. Again, note what's on, what isn't. Ask snapshot. Okay, and there's just a couple more. Total at the ask. Again, note those. Volume profile, that's the hard one. You can see the orientation, what I have turned on, uncheck that, and the colors I use. The trade column, That's how I get the red and greens, which is really useful. I don't know why it doesn't do that by default. When you enter short, make it red. When you enter long, make it green. I really like that. Some of the other display schemes do that, but the defaults don't. The trade window and the chart. And this is pertaining to the auction vista, so it doesn't really pertain to what we're doing. One other thing, let's see, the parameters, I don't think, well, that's my parameters. I don't think anything there really matters, but you can see that. For the power meters, I don't use them here. I only use the power meters on the tape. Trading, I use these settings. And shortcuts is individual. I think I showed parameters already, but if I didn't, that's those. And that's all of my settings for those. Should be self-explanatory once you have all that stuff, but I'll be happy to help you guys, beyond that. I just don't want to help, everyone set up their individual platform, but if you post all those in the Slack, please post them in docs, charts, and indicators, and then I'll be happy to answer questions on any one of them. Remember that the individual colors aren't specific. I was just going for like a gray, and the way that it chooses colors, you can't like pick a palette from one tab to the other, which is really kind of a pain in the ass. But anyway, that's the way it is. The other thing I did, you notice like it's slightly different for oil, and the only way, all I had to do that was just go to the one for the appearance and then go to the volume profile. And you can see that's the only thing that's different, is just that the value area is a different color. And I did the same thing over here for gold. Its value area is gold. So that was just a way for me to, oh, that's gold, that's oil, and all the indexes are kind of this cyan color. Again, anything you can do to make it easier on your eyes to make quick decisions is a good thing. Like taking indicators off your charts, except the ones you're absolutely using, and taking columns off the domes, like, pulling and adding. To me, that just wasn't giving me an edge. It was distracting me. I don't need to know that, because again, those are still orders. So pulling or adding orders doesn't mean anything to me. What's the name of my volume profile indicator on the charts? That's D value area, and I did post that in the docs indicators, along with the settings for it. They're different slightly, Maria. For example, on all the charts except the Renko, I don't have it on the tick charts. I have it on the 30-second and the 5-minute, and the settings are the same. And this is what they are here. So that's my D value area settings. So you guys could take a screenshot of that. Please, somebody do that and post it. And then the name, let's see, it's slightly different on this one because it's one profile. So on that one, D value area looks like this. Somebody take a screenshot. I'll leave it up. Okay, thank you. And then the last thing you guys keep asking me, I will show you that one too, is what are the colors here for higher highs and higher lows? And that is part of price action swing. And those are the settings I use there. Take a screenshot. Happy to do this anytime we do, Q&A. What I don't want to do is have constant questions about my platform, or whether I like, why I'm still using an InterTrader 7, or, how comes, I think Sierra Charts is better. How come you don't use Sierra Charts? I can't tell you how many times a day I hear this stuff and how many emails I get. And, I say it, I laugh a little bit, but it's frustrating because, number one, those people aren't getting the point. And number two, that's so individual. Find your own platform. Yeah. I show you what I use and I tell you why I do it. But, there's a lot of guys that love Sierra. Some of the reasons that people like it is you don't have to buy it up front. You can pay by the month. Ninja's expensive. Okay, that's a real good reason if your budget's tight, So whatever applies to you applies to you. Don't marry the following things. Do not marry indicators. Do not marry senseis. Do not marry tools. Do not marry instruments. If you want to have a trading life, you want to have a career doing this, you should be able to use any toolbox in any market over time. And that is a very important lesson. I know people that freak out when their TradeStation indicator for XYZ stops working because of some bug. And that just tells me that they have no idea how to trade. And that's literally what that means. Yes, I am recording it, I think, I hope. It's supposed to be. Yeah, the little light's blinking. Do I run, let's see, hold on, I need to back up. Okay, I answered Maria, done. Are the volume delta and LRCs built in? No, well, yes, the LRCs are built in, and I've posted those settings a million times, but I'll do it again because I'm just a nice guy. So there's one of my LRCs, that's the long one, and that's the fast one on every chart that has two. It's those two. It's a 120. And now if you do this with the built-in ones on Ninja 8, I think you have to use 2 in there because this is the width of the whole thing. It's 2 each way from the center. And I think they fixed that in Ninja 8 and they made it 2 standard deviations or 2 delta or 2 sigma, which is really what it is. So anyway, now the question, I've told you before whose indicator that is, and it's posted in the group. That's PJ's, and it's a great little bar by bar, and there is an NinjaTrader 8 one, and that's also posted in the group. So if you're one of the people asking me that, that means you're not participating in the forums, in the group, in Slack, and I'm gonna get mad at you because I want you guys there. There's material there that, I'll keep it up for a while after the 10 weeks are done, but not literally looking at every channel every day that has something in it is hurting you, those of you that aren't doing that. I know some of you are. Okay, do I run it as a plugin or in DayTrader? All right, right now you're witnessing the Ninja plugin in Ninja 7. I have another computer sitting next to me, Ferv, that has Ninja 8, also with the plugin, and it has DayTrader with Journalytics on it. I'm in the process of transitioning to Ninja 8 and the plugin. I may or may not run DayTrader. There's also a bridge you can use DayTrader to execute into Ninja. I haven't decided which way I'm doing that. I'll probably start with the plugin just because I know it and I like it, and then see if I want to migrate. There are some things DayTrader does that the plugin doesn't do that I like, but I'm not going to bore everyone with those now. How effectively can you use LRCs and in what conditions? That's exactly why you use them, Jury. They expand and contract based on the price movements. That's the point. I'm trying to teach you how to see range. That's what the LRCs are for. Again, you're trying to apply this to how can I start my combine Monday, and that's the wrong answer. The right answer is understanding what an LRC is. It is a linear regression channel. What that does is it takes an entire range of price dots. Okay, let's go through this right now, everybody. Okay, a linear regression channel does the following. If I took every trade on this chart and instead of having a bar, I just had a dot where there was a trade. What LRCs do, what linear regression does is it says, okay, I want to find a line through the center of all those points. It calculates that. And then what I do is I gray that line out and I tell it to give me 2 standard deviations from that line in either direction. Why? Because what I'm trying to do right now is have it expand and contract with the price. That's the whole point. I want to see the range of the fast one within the range of the slow one. If I'm getting this kind of behavior, that tells me not only are we consolidating, but we're consolidating. So, and odds are, that's what it looks like on the 30-second chart too. By the way, I took my 30-second LRC off, but if you're going to have one there, use a 40 period. I think it's really deceptive there. It shows you trends that don't exist. LRCs are not indicators of trend. They're indicators of the statistical analysis of range. Jerry, are you hearing me? Okay. They have nothing to do with executing a strategy other than to help your eye see the ranges as they're expanding and contracting and the micro range within the larger ranges. Now, there will be days when you will see really interesting formations on LRCs, and that should immediately tell you something about the trading. For example, when you have the long one and the fast one both angled up at extremes, I mean, this isn't that extreme an angle. Imagine, 75 degrees. That happens on a breakout. And the one inside is angled even steeper than the longer one. Then you have momentum building within momentum. That's what it's telling me. And it's telling me that the old range that we were in just blew apart, and it's expanding and going up on expanding volume. How do I know that? Because this thrust up was 200 contracts, then it pulled back on half that. Then it thrust up on 260 and it pulled back on less than a third of that. Are you getting it? It has nothing to do with the price points. It has to do with the energy of the move. It has to do with the aggression. Good, good. And that's why I really want you guys focused on learning in the workshop and not, how quick can I apply this to making money and, getting funded? Because you'll miss out on a lot of learning, I think, if you do that. Is it stable running on Ninja? Yes, my Ninja is rock stable. I never shut it off. It goes for months. I know people have trouble with Ninja, and that's usually because they pack it with too many indicators and third-party garbage. And the best way to run Ninja is install it clean and only put in whatever you're going to use. Like if you're going to use the plugin, install that. Don't install anything else. And then it should work fine. You need a reasonably fast computer. You have to know how to optimize Windows. It doesn't run well in virtual systems on Macs, but nothing does. I don't recommend that under any circumstances. And that's that. Okay. Wow, what? Go ahead. If you're asking about that stuff now and you want to learn more, now's the time to ask me, because I'm not going to answer it in Slack, and I'm only going to answer it in these Ask Anything Q&As. I have 2 SSD drives. How do I use them? I have a 3500. That's the M.2. That's the boot drive. And then I have another standard SATA 3 that's for data and whatnot. They're both 1 terabyte. And I have really fast memory, and a lot of it, 32 gigs. Ninja doesn't need a fraction of that, neither does Jigsaw, but the trick is to keep everything virtual. And I run multiple virtual machines in Windows, but that's a whole nother conversation. But I would definitely run SSDs, a fast video card, and some form of i7. That's really the minimum. And we can talk more about that. But Ninja, if it has the resources, is fine. What Ninja doesn't do well, if you're trying to do replay on it, it's horrible. But you've heard me about replay. I think it's a waste of time. So if you have that setting turned on to record replay, that just overwhelms Ninja with stuff to do that has nothing to do with trading. It only has to do with you practicing, and it's the wrong way to do that. So that might be, if you're having Ninja issues, anybody, turn off replay. It's garbage. Even in Ninja 8, still garbage. I don't believe in it anyway. You heard that. So I believe in trading live. So anyway, okay. Other questions? This has been a very long session, almost an hour and a half. I hope the recording goes that long. May have to buy more cloud storage, which I'm happy to do. Any other questions or comments? I will have my old machine available. That's a 970 GTX with an i7 4700. I'll probably sell it sometime in January. Maybe one of you guys wants it. Maybe I'll cut you a deal. Happy to do that. Okay, Darren, thank you. I'm very happy with the progress of everybody. But again, I want to reiterate to all of you that there's a couple of people here that are demonstrating the best way to learn in this environment, as well as just a model for learning anything difficult. And Darren is a good example of that, and the feedback he's posting. Lee as well. Also, Maria and David and Steve Weber. You guys, John Lambert's posted a couple of things. Those of you guys that are not interacting in the Slack, you're missing a lot. And even if you're interacting like Sommer, bless his heart, he's still looking for that technical Bubba, and that's fine. That's the point. This is a safe environment to do that. We're going to laugh and we're going to poke fun at him, but he may be the next rock star algorithm programmer out there in ADL. You never know. All right, guys, wrapping it up. I'll see you all in a couple hours for instruments. Have a good one.